Will the Fed cut rates? The Fed meets next week. And if you would have asked anybody 2 weeks ago whether or not the Fed was going to cut rates, the answer would have been heck no. But you know what? Higher interest rates, mortgage rates are taking a toll on new and existing homes. And you now have Fed chair or Fed governors actually saying we should make a cut. We are in a too restrictive of an environment where the Fed funds rate is now. Fed Governor Waller, in a speech to NYU, spoke the title of his speech, "The Case for Cutting Now," and he thinks we should be closer to 3% on the Fed funds rate. Right now, we're between 4.2 and 4.5%. So that's a full 1.25 to 1.5 points lower than where we are now. And Fed Governor Waller, he may be the next or Fed chair. So interesting. But he highlighted a couple things that make it a good argument for us cutting the Fed funds rate. One, tariff impact is short term. All right. The long-term impact, it's a one-time hit when you have tariffs. And we haven't really seen that yet anyway. Inflation is still low. The GDP, gross domestic product, is soft. It's been lower than what the Federal Open Market Committee projections have been. So that is a big deal. Employment is still low. Do we want to wait until unemployment is high before we start cutting the Fed funds rate? No, I don't think we want to keep unemployment low overall. And we can. And also, inflation is already near the target rate. We're not at 22% anymore. We're not even at 3%. We're below 3%. We're at 2.7%, 2.6%. So inflation is much closer and pretty steady and near or the desired 2%.